Let's be honest, pretty much all of us have a homeowner's insurance policy, but almost no one really knows what's inside it. So today, we're going to pull that document apart and demystify it. This thing is the financial safety net for your biggest asset. And I promise by the end of this, you'll get exactly how it works. Let's get into it. I mean, really think about that for a second. You have poured so much time, money, and effort into your home. But when the unexpected happens, and it does, like a fire, a big storm, or even a lawsuit, what is actually standing between you and a potential financial nightmare? Well, the answer is your insurance policy. But it's a tool that only really works if you know how to use it. So what is this thing really? At its core, homeowners insurance isn't just one single protection. It's what's called a package policy. A better way to think about it is like a financial toolkit, where every single tool is designed to fix a very specific problem. So today, we are opening up that toolkit to see exactly what's inside. All right, so there are 6 core protections or tools in pretty much every single homeowner's policy out there. If you can understand these 6 coverages, you'll know exactly what you're paying for. Let's start with the absolute foundation of it all. The first, and you could argue the most important tool in your kit, is Coverage A, which is for the dwelling. This is the big one. It's designed to protect the physical structure of your house, the actual building you live in. And you really got to understand just how much this dwelling coverage includes. It's not just the walls and the roof. We're talking about the very bones of your home, the foundation, the floors, and even stuff that's built in, like your kitchen cabinets and countertops. If a fire or a massive storm just levels your house, this is the part of the policy that pays to rebuild it from the ground up. Okay, let's move to our next tool. We've covered the house itself, but what about all the other things on your property that aren't actually attached to the house? Well, that's exactly where Coverage B for other structures comes into play. This tool protects those other valuable things on your land. Like a fence that gets blown over in a windstorm, the shed where you keep your tools, or a detached garage. Now here's a crucial point. This coverage is usually just a percentage of your main dwelling coverage, typically around 10%. So if you've got a really valuable guest house or a big workshop, you might need to talk to your agent about increasing that amount. All right, now we move inside the house and, believe it or not, even outside of it. Tool number 3 is Coverage C, and this protects all of your stuff, your personal property. This is the tool that helps you replace all your belongings after something bad happens. This coverage is actually incredibly flexible. It protects your couch, your TV, your clothes, of course, but it can also cover your laptop if it gets stolen from your car while you're on vacation. But, and this is a big but, be aware that standard policies have lower limits for specific high-value things like jewelry, art, or firearms. For those, you're almost certainly going to need to add some extra coverage. So the last 3 tools in the kit create your personal safety net. Coverage D, loss of use, pays for you to live somewhere else, like a hotel or a rental apartment, if your home is unlivable while it's being repaired. Coverage E is your liability shield. This one is so important because it protects your assets from a massive lawsuit if someone gets seriously hurt on your property. And finally, you have Coverage F, which is for medical payments. It covers smaller medical bills for a guest, no questions asked, which is a great way to keep a minor accident from turning into a major lawsuit. So now we know what all the tools are, but every toolkit comes with an instruction manual, right? Now we need to understand the 3 key rules that decide how, and just as importantly, how much your insurance company will actually pay you when you have a claim. Okay, the first rule is all about how you get paid. Do you get the old value for your stuff, or do you get the new value? Actual cash value, or ACV, pays you for the depreciated value. Think about it. What's a 10-year-old roof actually worth today? Not much. Replacement cost, or RCV, pays you what it costs to put a brand new one on. The takeaway here is absolutely critical. Unless you want to pay the difference out of your own pocket, you need a policy with replacement cost coverage. Next up, what causes of damage are actually covered? A named peril policy has a very specific list. If the cause of your damage, like fire or theft, isn't on that list, guess what? You're not covered. An open peril policy is so much better. It covers damage from any cause, unless it's on a short list of specific exclusions, like floods or earthquakes. This completely flips the script and puts the burden on the insurance company to prove your claim isn't covered. And finally, the deductible. This one's pretty simple. It's just your share of the cost. If you have a $1,000 deductible and a $10,000 claim, you pay the first $1,000 and the insurance company pays the other $9,000. A higher deductible usually means a lower premium, but it also means more risk for you if something happens. All right, now that you know the tools and you know the rules, let's talk about the fun part, how you can customize and upgrade your toolkit. Because trust me, not all policies are created equal. So, the starting point for most homeowners in the US is something called the HO3 policy. You've probably seen this name on your own insurance documents. It's the industry standard and it provides a really good baseline of protection. So, how can you upgrade from that standard policy? Well, look right here at the key difference between the standard HO3 and the premium HO5. With a standard HO3, your house itself gets that fantastic open peril coverage we talked about, but your stuff, your personal property, is only covered for that limited list of named perils. The HO5 is a huge upgrade because it gives your personal property that same, much broader open peril coverage. You can also add very specific tools to your policy. They're called endorsements. For instance, water backup coverage is for one of the most common and messy claims you can have, but it is not standard on most policies. Same goes for service line coverage for those super expensive underground pipes. These little, inexpensive upgrades can literally save you from gigantic, unexpected bills down the road. So after going through all of that, what's the one thing you absolutely positively need to remember? What is the real purpose of all these tools and rules? It really all comes down to this. Yeah, your mortgage company makes you buy it, but that's not why it's important. It's important because it's the financial backstop that lets your family recover from a total catastrophe without going into financial ruin. It protects your family, your home, and your future. So I'm going to leave you with this. You've now seen what a complete, solid toolkit is supposed to look like. The real question is, what does your toolkit look like? When you pull out your own policy, are you going to find that your financial safety net is strong? Or are you going to find some dangerous holes that need patching?